Okay, so we're on the eve of 2024, and it's looking a little, I don't know. Or is it? Well, let's find out in this video. I'm Mark Monroe, and this is your come up. Let's go. Okay, so we're looking into the next year, and you're trying to figure out exactly how is it that you should put together your blueprint for your thesis and try to put it all together as it pertains to, okay, I want to invest, or I want to make trades or whatever it is, but I need to come up with some form of thesis for the market. Well, here's how I do it every single year. I'm actually passing it on to you guys and gals. All right, so here's how I do it. The baseline amongst everything is economics. Economics is literally always going to be the baseline for a bear case, a base case, and a bull case. So just remember that. You have the 3 Bs, which is bull, bear, base. And then of course you have the economics as like kind of like the foundation that sets everything. Because again, it's like, we walk out of this year going into the next year and asking ourselves what's going to consistently linger into next year, what's not going to be with us next year, and what type of things, based upon what has happened, what do we kind of like expect as the next thing that could potentially transpire going into next year. So for example, on the economic landscape, we were dealing with high inflation. We were dealing with a government that was spending exorbitantly a lot. We saw unemployment. We're starting to see unemployment start to tick up. We're starting to see the cost of capital still remain at elevated levels thanks to inflation. We're also seeing certain areas as it pertains to demand being crushed thanks to that monetary policy. So these are some of the things in which that we saw in 2023. So as I look to 2024, I ask myself, okay, first thing, do I expect inflation to come down? Yes, I think that we're going to go through a deflationary period. So that's going to happen. We see that demand has also been crushed, so because of that monetary policy. But at the same token, we're going to see that demand starts to creep back up because of the fact that we've been sitting in this pool of conversation over the past, let's say, almost 3 years. Okay, so we should be starting to see some evidence that we're starting to come out of some of those environments. So those are the things that I look at. We went from a high Fed rate hike environment to a Fed kind of like slowing down, and kind of like saying, well, okay, we're pretty much getting ready to land. Now, whether or not that landing is going to be soft, turbulent, or whatever it is, look, we're in the beginning of November if you're watching this video of 2023. So we'll see how it all transpires. But in my case, I think that the Fed has kind of done a somewhat decent job. We'll probably get to a turbulent but yet soft-ish landing, meaning that essentially they're not going to completely break the economy. Now, of course, with all the spending that the United States government has been doing, that's going to be something in which that people are going to be looking at as it pertains to probably what are going to be some of those cuts going into 2024, if there's going to be any cuts at all. We're also moving into an election year. So there's some historical pieces behind that. All right, so let's look beyond that. Let's look at also what we expect from, let's say, the companies. So when you're dealing with a company, one of the things I love about reading about companies, especially when I go back and look at their earnings periods. So you have 3 earnings quarters that have now been reported, and you start to see trend behavior within a company. So for example, if a company has been like, okay, hey, our profit margins have been shrinking over a period of time, but at the same token, we see that we're making a large amount of investment dollars. So the first thing I'm going to look at is going into next year, do I expect that those profit margins are still going to come down, or do I expect those to make a turnaround as the economy turns around? So AKA the demand and versus supply, and also the cost of things. Then on top of that, I also look at it in the sense of, okay, you made these investments over the first 3 quarters. Okay, when do we start seeing the results of that investment that you made. And normally, typically within companies, it could be anywhere from a year to all the way out to, in some cases, 4 years. I mean, if you look at Meta, I mean, they've been investing into the Metaverse for all this time ever since they acquired Oculus. And, you know, you look at the, from heavy duty spending to now controlled spending to now essentially we're starting to see that there's some actual results here, given what they did. So shout outs to Meta. They did a good job, though that it was tough. So those are the things that I look at. Like, you know, I'm looking at like, okay, hey, do I expect earnings to get better? Do I expect some earnings growth going into next year? Or do I expect somewhat of the same story to be said? Now, of course, like I said, economics is an undertone, and then essentially the company earnings kind of like tells the rest of that story. And the reason why I say economics is the undertone is because of the fact that 9 times out of 10, when you're looking at the economics, you're probably only looking at domestically. You're probably not looking at it from a global standpoint. And if you are, kudos to you. Congratulations. You deserve a gold star. All right, so now we got economic undertones, then we look at companies. And here's the thing. Let's look a little bit further into that earnings portion. Here's how you can kind of like dissect earnings. Look at the business and which the company is known for. Now, every quarter, companies like, let's take, for example, since I spoke about Apple last week or last time, whenever you saw this video, when I spoke about Apple, I talked about what are some of the things in which that they're known for. So Apple is known for its iPhone sales, its Mac sales, its services business that is consistently growing, and its service business that thing was thangin'. So they did exorbitantly well. And then, of course, their profit margins ended up at 45% versus the 44% expected. So congratulations. So now when you look at that, what is the investors' expectations moving forward? Do we expect profit margins to remain somewhat elevated, or do we expect profit margins to take a hit? Well, if we're looking at, and if the data tells us anything, we're probably looking at some soft numbers expected for Apple's next quarter or two. But at the same token, we also have this expectation of a little bit of anticipation for what's happening new that Apple is bringing into the foray. And those are going to be the things in which that we look at, but we judge them based upon like units sold versus units expected to sell. And then on top of that, we look at it from a profit margins. We look at cash that they have on hand, because that's amazing. Apple, what is it, $167 billion in cash on hand. Incredible. And then on top of that, we look at where is it that they're spending their money as it pertains to investments. When you got a CFO now turned CEO and Tim Cook, it's kind of like his world and everybody else is paying rent, because he's very good at, really the financial side as it pertains to projections. And then he has an amazing, another CFO that works right beside him. So great. All right. So, but if you look at it across all companies, let's take an AMD, for example. AMD was getting crushed ultimately this year by NVIDIA, though that AMD did rise this year as a stock value. But it really left a sour taste in investors' mouths, because they expected that AMD was going to come out with its AI chip a lot earlier, but that got delayed. So in December, we expect that AMD's chip will come out, and we're going to see exactly what the performance is. And if the performance is great, and if essentially NVIDIA is still kind of like bottlenecked on that demand side with, not so much supply, that could be an opening for AMD. So, we look at the things based upon, okay, we got undertone economics, we got company earnings, we understand the business model, and is the business model still intact on bull or bear case or base case? And then we look at this other thing as it pertains to sentiment. What is it that the investors are thinking? What is it that their temperature check is? Investors take in a lot of information, whether they're looking at things from the economic side, whether they're looking at the stories that they're hearing from headlines, what they're hearing from companies, and then on top of that, what they see. It's kind of like looking at athletes, where you hear about everything statistically, and you hear about what everybody else is kind of like talking about, and then there's this thing called the eye test. What do your eyes tell you? And that's where it's like, some of your best analysts, they don't just like give you projections of numbers. They actually go to places and go check out the storefronts. So like, if you want to be an analyst and give your base case or best case, or your base case, bull case, or bear case, these are the things in which that you're going to have to look at. And ultimately, you'll formulate your opinion. Now, here's another thing that we look at. Let's talk about, like, for example, dollars on the business. So if we look at, let's say, any business, and we say, okay, hey, if we expect growth here, Well, what does that add to the bottom line to the business? Where we start to add dollar per share. Does this increase the value of the companies per share by, let's say, $1, $2, $10, $50? What does that look like? Well, here's what it looks like. When you expect high earnings growth, when you expect a lot of anticipation for something, and there's a strong demand within that marketplace, then that's going to probably increase it, especially based upon price point. If the price point and profit margins are pretty solid, then that adds to the dollars per share. If profit margins are coming down and if demand is waning and everything else, then that's probably going to take away from dollars per share. So we look at companies like a Tesla, and why is it that Tesla went from, like, at the high, I think it was like 280, 270 this year, to then now they're kind of like at around like 220, but they came all the way down to like 197. The reason why was because the story was all about demand. So if demand was waning, and if ultimately people were like struggling to buy a Tesla vehicle because of the fact of price, and on top of that, like the cost of borrowing, that's going to have an impact on the business. So what kind of impact does that have? What does that play towards investor sentiment? Is it something that investors know that great companies are still going to be great companies? But if I'm looking at it in the future as it pertains to, okay, the company's great, but do I expect the company to have a great year? That's going to be the question. And what is it going to take in order for that company to have a great year? Those are the things in which that you got to look at when putting together your thesis. So let's run that back. Let's run back the rubric here. You got economics at the bottom. You got company as it pertains to its earnings. So that block as it pertains to company earnings, and using those first 3 quarters as like kind of like a way to look at trends. Then on top of that, we look at just overall business. So just the overall business, or maybe the overall sector, what's happening in the sector, what's impacting the sector. And then on top of that, the next thing is sentiment. What is it that investors are feeling? What is the kind of conversations that are happening? And what you do is you just put it in the base case, bull case, or bear case. So in base case, here's just a basic rubric of what it looks like for any company, or just for that specific company. So if I'm Apple, okay, hey, Apple's iPhones, I'm going to do decent. Here's the overall projection as it pertains to the number of iPhones that they're going to sell this year, which is still their high profit margin item. Do we expect that, everything is going to pretty much remain in line as it pertains to profit margins? Do we expect that, cost of capital is still going to remain elevated, or do we still see it on that trend of coming down? Do we see that the consumer is also somewhat as it pertains to waning as well? So will Apple have to make some adjustments? That's a base case. Bear case would be like, okay, hey, we expect a significant cut as it pertains to Apple demand in phones. We expect profit margins to come down because in order for them to meet that, in order for them to build up demand, they will have to do significant cost cutting or some type of incentive program with carriers. And at the same token, that's going to eat into the profit margins as it pertains to the cost for Apple. And then on top of that, if we see that more folks are if we see that unemployment is starting to increase and consumer spending is starting to come down and consumer sentiment is starting to drop, that's going to weigh on Apple. Bull case. So look, City Boy is up. Just kidding. So pretty much what it looks like in a bull case is that, earnings growth goes back to double digits. And essentially that's led by iPhones being the number one seller. Again, China is kind of like the whole China conversation has been kind of like a misnomer. And then on top of that, we see profit margins still remain elevated. We still see that people are buying phones. We see that inflation has significantly started to come down by the next iPhone cycle. And then on top of that, we see more devices, and then their profit margins come up because cost of materials come down. That's a bull case theory. And so if you notice there, it's a little something for everything. And of course, I gave you some economics. I gave you some sentiment. I also gave you some of the things as it pertains to earnings that can impact. That's ultimately how you put together a thesis. I hope you enjoyed today's video. Until next time, I'm Mark Monroe, and I hope that this was your come up. I'll see you in the next one. Peace, y'all.